There's a chain of burger restaurants in Australia that have gone viral in the last few years for one very specific reason. I know it's not the food, which, if Reddit reviews are anything to go by, is decent at best. You see, people visit this burger chain to get yelled at by the staff. Yup, it's very aptly named Karen's Diner. And if you like your burgers with a side of insults, then this is certainly the place for you. Its tagline is literally rude staff and great burgers. Of course, customers get to yell back too. Now, thanks to the magic of social media, Karen's Diner blew up and was even able to expand to the UK 2 years ago. The reason I'm telling you about an Insta famous Australian burger chain with a rather bizarre claim to fame is because its approach to customer service is eerily similar to a tiny Nagpur-based PMS fund that's emerged as a top performer in the recent past. Now, Counter Cyclical Investments doesn't waste time with handholding. The 6-year-old firm has a reputation for being quite cut and dry with its clients. Consider some gems from the Who Shouldn't Invest With Us long list that they have. It has things like those who won't disturb us by calling us for reassurance every time the market falls, or we don't have any provision for a relationship manager. Once you've taken an informed decision to invest in our PMS, please avoid calling us. Those who are looking for regular correspondence and active interaction may please stay away. Now, if you think moneyed investors, the kind who have to put in at least 50 lakh rupees to be a part of Countercyclical, are put off by the insolence, you're wrong. Countercyclical's assets under management have shot up over 10 times in the past 3 years, and its customer count has grown by leaps and bounds. Why, you ask? Well, the fund house's only scheme, which happens to be a small cap one, is a chart topper with 5 years annualized returns of, believe it or not, 78%. As we know, investors love nothing more than returns. So you take the quirky approach to client servicing with a pinch of salt. In this episode, we dive into how this tiny small town PMS firm has managed to make millions by venturing where most of its larger rivals fear to tread. Welcome to Daybreak, a business podcast from the Ken. I'm your host Rahil Philippos, and I don't chase the news cycle. Instead, every day of the week, my colleague Snigdha Sharma and I will come to you with one business story that is worth understanding and worth your time. Today is Thursday, the 8th of May.
Hi, I'm Snigdha, the co host of this podcast. And before we jump back in, I just wanted to share some exciting news with you. Daybreak is growing and we are looking to grow our team too. And if you're a journalist who listens to Daybreak and thinks, I wish they'd cover this, or I know exactly what would make Daybreak even better, we would love to hear from you. We're looking for somebody who's curious, who's driven, and passionate about business and tech news. If that sounds like you or somebody you know, please check out the details in the show notes. Applications are open now. And back to the episode.
Simply put, here's what Countercyclical does. It buys the stuff that everyone else is running away from and then sells it when people start thinking it's cool again. The PMS's only scheme, which is long diversified value, invests in small cap blue chip stocks. These are companies with a market capitalization of less than 5,000 crore rupees that exhibit the qualities of a large cap stock, meaning they show financial stability and potential for future growth. Typically, these are companies with an outsized market share in an otherwise niche sector. Essentially, Countercyclical is buying gold at the price of silver. The Ken reporter Archijma Iyer spoke to the founder and director, Keshav Garg, to understand his process. He said the objective is simple. He wants to buy the existing business at a discount, and then growth should come for free. So the firm is essentially looking for companies that are undervalued but have high operational efficiency. Okay, but how do they decide to sell then? Well, Garg says they sell if they see another stock with better or similar quality and lower valuation, or if they find that their hypothesis was wrong. Now, Countercyclical does not back down from this approach, not even when the markets look bleak. Garg doesn't introduce additional schemes, instead, chooses to stick with his repertoire of small and nano caps. He says he's satisfied with this one scheme portfolio, and introducing more would mean marketing, which is something he is clear he does not want to do. Naturally, this is a risky way to do business, especially in a volatile market. Like one senior executive from a wealth management platform told our Trishma, the kind of names that Garg plays are quote unquote the craziest. There are times when he is the only buyer or seller, which is why he attracts a very specific kind of client. Now, Garg looks for clients that don't panic when markets are falling, hence the long list of disclaimers shared with them at the very beginning. To mitigate the risks, Garg builds a universe of about 100 to 130 shortlisted stocks. And of these, he chooses around 40 to 50 companies for each investor. With small and micro cap investing, diversification is key. Garg explained that's because small cap stocks run the risk of being decimated by factors both controllable and uncontrollable. So it's good to spread the risk. Also, because in a crashing market, it's much easier to sell small quantities in a large number of companies than a large quantity in a small number, especially in small micro caps where there are no buyers. Now, Garg generally gravitates towards the old economy, concentrating his holdings in things like manufacturing, consumer goods and services, chemicals, and the like. He stays away from the sectors most people choose, like banking and financial services or technology, for instance. What boosts trust is the fact that this company has skin in the game. Over a third of its 550 crore rupee AUM belongs to its promoters, that is Garg and his immediate family, which makes sense if you know the origin story of this firm. Spoiler, it's deeply personal. Stay tuned to find out. Back in 2004, Garg ventured into investing on a lark. While studying science at Ferguson College in Pune, he started managing his family portfolio and was soon managing friends' portfolios too. Before long, through sheer word of mouth, Garg had gone from managing portfolios of 30 to 40 people, all extended family and friends, to around 400 people. The firm's minimum investment threshold is currently 50 lakh rupees. And as of February, its client mix is 18 corporate, 333 non corporate, and 54 non resident clients. Now, despite blowing up, the firm still only has a team of 10 people. And the unique criteria for joining is a passion for equity research and a stable internet connection. Garg also has no plans of moving to Mumbai or Bangalore despite his success. In fact, he told us that if it were up to him, he would move to an even more remote place. These are the quirks that make countercyclical. Its employees spend most of their time conducting core research. It also doesn't charge an upfront management fee, only a 20% performance fee on returns exceeding 10%. And guys, reason for that is pretty straightforward. If I'm charging an investor fixed fees, I cannot ask them to leave me alone. So instead, Garg puts all his focus on identifying strong portfolios. For instance, if the steel industry is going through a downturn, Garg and his team will look out for that one outlier company that's doing well. One such stock shortlisted back in 2021 was a Patna-based consumer electronics retailer called Aditya Vision. Garg recalled how, after perusing the company's earnings report, he made a few calls to friends in Patna asking if they had even heard of it. Then he landed in Patna himself to do some mystery shopping, meaning he stood outside the shop to assess footfall. Garg then liked what he saw and ended up buying the stock. And his bet paid off. It has since turned out to be a multi bagger. It's also gone from being relatively unknown to being picked up by institutional investors like HDFC Mutual Fund. Now, there's a lot of grunt work involved. Garg attends and asks very tough questions at as many annual general meetings as possible. Of course, not all meetings are fruitful, but the ones that are have been enough to put Countercyclical on the map. Stay tuned. The high risk that clients took with Countercyclical small cap driven strategy seems to have paid off. Just consider the top 5 stocks in the scheme's portfolio as of February. A poultry company called Venky's India, polyester film manufacturer Garwari High Tech, business solutions company MPS Limited, Ambika Cotton Mills, and pharma company Genbergt. Now, these together account for nearly a quarter of its portfolio and spot market caps of less than 6,500 crore rupees each. In fact, the last two are less than 1,000 crore rupees, meaning they are micro caps. Most fund managers would be wary, but not counter cyclical. The bets are all well thought out and spot zero to negligible institutional holding. All the 14 companies that made it to Countercyclical's top 5 since 2022 have been profitable, with many growing their bottom lines quite smartly. Their stock performance, though, has been mixed. Some, like Kaveri Seeds and the multi specialty hospital Kovai Medical, have had dream rallies over the past few years. Others, like Apollo Sinduri Hotels, rose and fell, while still others, like the logistics solutions company All Cargo Logistic, fell sharply. But the overall report card has brought some cheer to investors. That's why counter-cyclical's disclaimers come in. Remember, if bets don't go as planned, don't disturb them by calling.
Daybreak is produced from the newsroom of the Ken, India's first subscriber-focused business news platform. What you're listening to is just a small sample of our subscriber-only offerings. A full subscription unlocks daily long-form feature stories, newsletters, and podcast extras. Head to theken.com and click on the red subscribe button on the top of the website. Today's episode was hosted by Rahil Philippos and edited by Rajiv CN.